Good evening, everyone. It's Ashley here from the Traders Circle. It's the 4th of July 2019. So if you're listening in from America, then happy Independence Day. So I'm going to get straight into this. It's a short video post on one of my trades from my hot list that I identified during my weekly trade planning call earlier this week. So if you're new to this, you've not seen me before, then feel free to subscribe to my YouTube channel, The Traders Circle. You can also find information, tips, training courses, etc. on the traderscircle.com. So with the weekly call, I just share my top picks for the coming weeks. For the coming week, and back it up with a full in-depth analysis. I also share some top tips and trade secrets and show you how I define my hot list, where I can isolate high probability setups, and then how I let the market come to me. So little tools and tricks that I use to let the market come to me, so I'm not just sat waiting and looking at the screen all day. I do spend a lot of time on the screen, but I don't want to be just randomly navigating around different currency pairs trying to find opportunities. So this is how I work. Some people work differently, but it's good for me. So yeah, let's just walk you through this. So what we've got here, very simply put, is I was looking at a simple short trade bouncing off key area of resistance, being this trend line here. So a trend line is only confirmed if it touches 3 times. So look at this here. We've got price rejection, price rejection, price rejection off this outer trend. Price moves down, comes up. Same pattern. We've got a nice little double top forming here. Rejects again. This moving average, this is the 200-day moving average, I think. Let's double check. Yeah, 200-day moving average. So that is a pretty strong dynamic area of support there. So this is why we didn't get a break above to touch this trend. Moving average is sloping down. Solid price rejection. Straight off this trend line here. Up we come. And then here we go. We've got a confirmation here. So it's very important not to just rush in. Now, if you're an intraday trader or scalper, there's lots of opportunities for it bouncing around a range. So it's not really what I tend to do. I do occasionally, but you've got a little range, say there, and you could have taken long and short positions throughout that cycle. But not for me, not on this occasion. So for me, I was looking for an intraday trade with a larger move and a tight stop loss. So as you can see, it's pretty obvious what happened now. This move here was OPEC. So on the Friday, not on the Friday last week, we're finishing the week leading into OPEC meetings. So OPEC is an organization basically that help regulate and stabilize oil prices by managing the amount of output the producers such as Saudi Arabia, Russia, etc. So they try and control how much oil they can produce based on factors such as economic growth, economic demand. So at the moment, we've got a slowdown in global growth, which translates into less oil being used. So the simple rule is this: if the producers are producing a lot of oil and the consumers are not using the oil, you're going to have an increase in stock. So supply and demand outweighs, supply outweighs demand, which means the price of oil sinks. So when OPEC regulates the amount of oil that's being produced, it stabilizes the supply to demand ratio, and oil prices can remain in a healthy sort of band. And it's to stop volatility. You don't want to be going to the oil, the petrol pumps one day and it's £1 a litre, and then the next week it's £2 a litre. So that would happen if there was no regulation around that. So that's what OPEC trying to do. So anyway, I digress. But going back to this, leading into this OPEC meeting, I didn't want to get involved. I would have if it wasn't for OPEC and I saw this. I didn't want to get involved because, as you can see, there's a big sell-off on the Friday just before the close. That was just speculation and profit taking from this move here. So if you'd have longed the position up here, you might want to be jumping out and taking some profits. So that's likely what the big institutions were doing here, hence the reason why I got a big spike down. So after the weekend, we got some positive news. It could have been negative news and come down even further. So best stay out. What we got here is a spike up. So OPEC had a positive impact on the price of oil. But with global growth creeping in, this is why we've come back and shorted. So it was almost like a fix. So a little short-term spike up because of OPEC, and then the bigger picture, which is global growth and demand for oil, has come back in. And there is a technical element to it as well. So how did I shape this trade? So this was my area of interest, this green zone here. This is made up from, if you look to the left, areas of support and resistance in a tight sort of range. So I look at the high support areas and the high resistance areas and the low support areas, and where there's a high concentration of them, I draw a band and carry it forward to this sort of here. And as you can see, it marries up with this trend line perfectly. So that's how I identify the area of interest. The confirmation has come from several confluences here. So we've got a test of support, a test of this trend line multiple times. I've let the OPEC meeting pass. I've let the market tell me which direction it wants to go. So we've got a lovely evening star formation here. And this is very textbook here. This is on the 4-hour time frame as well. So it's quite it's kind of in the middle of a high and the low. The higher the time frame, the more conviction these patterns have. The lower the time frame, the less conviction it has. So 4-hour and 8-hour are kind of in between the lower and the higher time frame. So this is a very nice pattern here, this evening star formation, and even better, this candle closed back below this trend line. We've got a nice pull and rejection and a very strong bar finish here. We've got the moving averages all rolling over underneath this trend. And as you can see, we've got a nice retracement pattern forming here and a rejection back off this trend line. So if we go to my screenshot, so what I like to do is analyze both winning and losing trades and give you sort of an in-depth report to why they were successful and why they failed. And also, just as I've explained, how I qualified the execution of this trade. So here's a screenshot before, just as I took the position. So I took the position and then took a screenshot. I also do that with my close. So I'll just walk you through this now. As you can see, I took it on this bar. This is a bearish engulfing. And it closed in the middle of these moving averages that are now rolling over. So I've explained how I qualified the trade, and this is how I executed the trade right on this bearish engulfing here. My stop loss was just above the trend, because if this is going to reject now, I would expect it to bounce underneath this trend line before coming short. And in this occasion, it doesn't always happen, it just continues short straight away. So that's a very nice, if every trade was like this, it would be great, but they don't always pan out like that way. Sometimes they can bounce around for hours, even days before spiking you out for a loss and then coming short, or just coming short. So every trade behaves differently. We can't guarantee trades. All we can do is trade what we see. So we take the setup, we identify the opportunity, we then manage and plan the execution by setting alerts. So for instance, this alert would have been dragged up to here. And when that alert goes off, I would have a look at price action. So I always have alerts in a tight range around my area of interest. And then when those alerts go off, all I do is monitor price action. So if I'm getting a bullish pattern, I'm not interested. I reset my alerts and I see what happens. So I let the market come to me. So that is oil. Interestingly enough, we also have a potential another trade forming here. Now, I'm not interested in this just yet. It does look like it wants to come short. So if I just zoom out a bit, I'm going to get rid of these arrows. These arrows were drawn, I guess, when I came out of this trade. Let's just take these away. Yeah, so basically, with this strong move here, we tend to come back to test the area that it broke out, which is these two sort of areas here. So I can move this around to sort of here now. The only reason why I'm not interested in this trade just yet is we've got non-farm data tomorrow and we are approaching the end of the week. So I'm expecting some sideways movement followed by an aggressive move up or down. So this could quite easily come back, test this support trend line and then come short again. What I'm expecting though is this is either, it's in the middle of this, it's just slightly in the middle of this triangle formation. So where the two trend lines sort of meet. So it is going to bounce around in this sort of area over the coming weeks, days or weeks. The other reason is it's approaching this 200-day moving average. So for it to break through there prior to the news tomorrow, you know, is quite unlikely. So this Fibonacci retracement, so we've got the price rejection, I drew my fib, and it came back to sort of test this sort of 50 area here where it's rejected. But it's just something I'm not interested in. And this is what I want to teach you guys, you know, anyone that follows me. Just because you've got a nice setup, you've also got to take into account when that pattern occurs. And if you've got high impact news that can negatively or positively impact the trade just around the corner, it's best to let that news happen and then let the market tell you what's going to let the market tell you what to do next. Anyway, I hope you've enjoyed this video. Sorry, it's quite lengthy. I do tend to go into a lot of detail, but again, if you want to follow me, guys, just subscribe to my YouTube channel, follow me on Instagram, and I'll speak to you in the next video.